We're taking stock of several earnings that have come through the course of the second quarter, and one of the companies that has also come up with results just recently is Symphony Limited. Well, what we're looking at is a flattish growth in terms of its revenue. However, at least prima facie, there's been a substantial improvement in its operating numbers. Hence, profitability moving up by around 9.5% on a consolidated basis year on year. But to take us through the quarter gone by, what's gone on, and what we can expect going forward, we have the management of the company with us. In fact, the executive director of Symphony Limited, Mr. Nrupesh Shah. Mr. Shah, good afternoon, and thank you so much for joining in. Let me begin by asking you about well, it's been a challenging 6 months of this financial year. Can you take us through your assessment of how things are? I know that you've spoken about a disrupted summer, but are we seeing a follow through in the second quarter as well? And if you could just give us a better understanding of what's led to the top line that we're seeing right now.
Thanks for having me. So, despite bad summer for cooling industry in Q2, that is September 23 quarter, our India sale YOY is in line with September 22 quarter. There has not been any degrowth. This is despite in some pockets of the country, trade is sitting on inventory. So that shows the power and pool of the brand, and that too with a better profitability, not only at a gross profit level, but at EBITDA level, in particular at a standalone India level. As far as visibility of the sale is concerned, of course, most of the air cooler sales, whether in the country or globally, happens during the summer. So, in terms of the customer sale, current time is off season. However, somewhat retail sales happens very small amount during September and October. But based on our internal business plan as well as off-season sales, I would say that overall sentiments are quite positive.
So you also make a mention of the degrowth in the entire industry as a whole. Vis-a-vis the industry, how have you stood? Is your 6 month decline less than the industry? How are you faring, considering I believe that you are at least a leader in the organized sector with respect to air coolers? That's the first part. And so second part, can you give us an idea about the market share gains in the first 6 months of this financial year?
Yes, so we continue to maintain around 50% of the market share in organized sector, despite several players, including large appliances companies, have entered into air cooling. And our position and market leadership has been unchallenged and numero uno by maintaining the market share.
Right. So I also want an idea on the Australian business. And you know that you mentioned that a considerable amount of business transformation is underway, and you guys are working on bringing costs down, making tweaks to the product line there as well. Can you, sir, elaborate a little more on what's happening in the Australian subsidiary?
So, in recent past, including September quarter, our Australian subsidiary hasn't performed well. It has, in fact, incurred the losses, mainly on account of major headwinds because of micro as well as macro factors in Australian market. However, we have embarked upon a major transformative journey whereby we expect the business to turn around by next year, and it is essentially converting the company from in-house internally manufacturing company to outsource manufacturing company, asset light, capital light company. That's number one. Number two, we have substantially reduced and further on the path of reduction of doing the cost of doing the business. So when we acquired the company, the CODB, that is the fixed overhead, was almost $15 million. Current year, we will end up with less than 50% of that, that is less than $7 million. And next year, it should be less than $6 million. That's number two. And number three, we have completely revamped the product range. So from installed products, whether air cooler or heaters or other products, it is completely a mobile product, having much better customer value proposition, and exploring already established our retail channel, which is there in Australia, and offering better profitability. So we expect that we should see the result and performance of that starting December quarter itself.
So the question really remains is that while the first 6 months have been subdued for Symphony, and you do suggest that the off season, have could be better. Do you think there could be at least some sort of covering up to make up for the big quarter, the big summer quarter, which was disrupted? Or can we expect the second half of this financial year to be more or less in line with what we've seen in the previous year?
No, this is too premature, and as per our investor relationship and IR policy, we don't give any forward-looking statement, whether for the ensuing quarter or year, in line with many consumer-facing companies.
Sure, sure. So I also want to touch upon the margins because we have seen an improvement in your operating metrics. The question is that where is the big part of the chunk of your improvement in EBITDA margins coming through? Is it because of costs which are curtailed, or is it because there has been an increase in pricing, or is it a combination of both?
No, it's a combination of a couple of factors. Number one, strategic price increase in some of the models. Secondly, better product mix. Third is also getting the benefit of reduction in input costs. And fourth is continuous thrust on launching of new models wherein we do have a better pricing, coupled with rationalizing some of the fixed overheads and also supply chain.
So your presentation also speaks about catering directly to consumers, and for that you guys are also working on putting up a platform, if it isn't already on. So can you give us an idea about the kind of investments which will go into, and when would it start meaningfully, start contributing to the business for Symphony?
I believe you are referring to D2C business or e-commerce
That is correct,
business.
sir. So D2C, yes, I'm speaking about D2C.
So in terms of the alternate channel, it includes D2C, e-commerce, large format store, and regional stores, whether in the country or overseas. Pre-COVID, it used to contribute about 10 to 12% of the top line, while in FY23, it contributed almost 30% of the top line. So that is the significant shift, and that journey will begin. As far as investments are concerned, in our kind of the business, whatever investments or expenses in terms of the dealer distribution network or promotion or creating the platform or consumer acquisition costs, all are revenue expenses and completely being written off. Okay. So whatever profitability we witnessed, whether in last 6 months or earlier years, is after writing off those expenses.
Okay. Well, Mr. Shah, that is all that I have for you. Thank you so much for joining us and taking us through the business as well as the various aspects that we wanted to talk about. Thank you very much. We wish you all the best.
Pleasure.
And on that note, we conclude this conversation, but don't go anywhere. There's lots more lined up. Stay tuned to BQ Prime.